What if I told you that 90% of traders use Bollinger Bands and RSI completely wrong? Today I am revealing a simple Bollinger Band plus RSI strategy with a secret confirmation layer that most traders ignore. This works for forex, crypto, stocks, and futures. Any market with enough volume and volatility will respect this setup. I have manually tested this on multiple charts over the past few weeks. Yeah, they're winning trades, and yeah, they're losing trades too. But here's the truth that nobody wants to admit. You cannot judge a strategy manually. There's absolutely no statistical significance when you just eyeball a few setups on a chart. You need data. You need rigorous backtests. You need hard numbers. So today we lay the groundwork, and next week we prove it with code. Let us start with the absolute basics. Bollinger Bands are volatility bands placed above and below a moving average. Most people use the default 20-period moving average, but for this specific setup, we are focusing on the bands themselves as dynamic support and resistance. When price touches the upper band, you are in the overbought zone. When price touches the lower band, you are in the oversold zone. But here is the massive problem that wipes out beginner accounts. Price can ride the bands for hours. It can hug the upper band during a strong uptrend and completely ignore the reversal signals. So, just touching the band is not enough. We need RSI to confirm the reversal and prove that momentum is actually dying. Here is the exact short setup. Follow these 4 steps precisely. Step 1. A green candle must fully close above the other Bollinger Band. This shows a strong push. Step 2. Your RSI indicator must be above 70, which is deep in overbought territory. Step 3. The very next candle must be red, bearish, and it must close back inside the bands. This is the rejection. Step 4. The RSI of this red candle must be strictly lower than the previous green candle. For example, if the first breakout candle has an RSI of 71, the bearish rejection candle must have an RSI of 70 or less. You enter short on the exact close of the red candle. This 4-step checklist confirms that momentum is definitively shifting down. The long setup is the exact opposite mirror image. Step 1. A red candle closes entirely below the lower Bollinger Band. Step 2. RSI is below 30, indicating an oversold condition. Step 3. The next candle is green and closes back inside the bands. Step 4. The RSI must be higher than the previous candle. If the red candle had an RSI of 29, the green candle must print 30 or higher. You enter long on the close. Now, here is why 99% of traders fail with this exact setup even when they get the entry right. They use the exact same stop loss and take profit on every single trade. They might have traded this specific setup with a 1-to-3 risk-reward ratio at some point, and they just keep using the exact same fixed numbers. But the market shifts. Volatility changes drastically from week to week. What worked perfectly last month gets stopped out by random noise this month. What you actually need is the average true range, or ATR. ATR gives you dynamic stop losses and take profits based on current, real-time market volatility. When markets are calm, ATR gives you tighter stops to maximize risk-reward. When markets go crazy and expand their ranges, ATR automatically widens your stops to prevent getting wicked out. This one single adjustment keeps you in winning trades longer and cuts losers faster. Now, as I mentioned, I have manually tested this pattern on multiple charts. There are beautiful winning trades, and there are ugly losing trades. But again, here is what matters most. You cannot judge manually if this strategy is mathematically working or not. There is no statistical significance in a handful of manual examples. So in part 2, what we are going to do is code this exact strategy and backtest it systematically. We will see which pair is performing good in it. Does it work better on EURUSD or Bitcoin? Which time frame does it actually have a mathematical edge on, the 5-minute or the 1 hour? And what optimizations could we add to the ATR multiplier? If you want to see all of this, subscribe to the channel, like the video, and share it with your friends. Next week Sunday, you will know whether this strategy truly deserves your capital or not. Trade systematic. Verify everything.